In this video, guys, we're going to look at market manipulation, fact or fiction. Stay tuned. Hey traders, warm welcome to you. All right, so check out our channel sponsors and link to them in the description below. But market manipulation, let's talk about this for a moment. So a lot of people say, hey, the market's manipulated, the stock's manipulated, so-and-so manipulated, and it's thrown around, you know, like a phrase and a kind of saying that goes all through traders. And I want to kind of dissect some of the points there. Now listen, I don't pretend to be the font of all knowledge when it comes to this. I'm just kind of putting you across my experience over almost 20 years and what I've seen and what I haven't seen, stuff I've heard, what I haven't heard, etc. So you've got to be careful. A lot of people use market manipulation as an excuse for why they've lost in a trade. Now, if people are saying that, you got to take it with a pinch of salt. Anyone can blame anything else. Just like in life, guys, anyone can make an excuse as to why they've not done something or something's not worked out as they wanted, right? But what I want to talk about here is some of the things that perhaps are going on and perhaps some of the things that are just normal market conditions. So market manipulation, generally, if we look at, say, small caps, then there is almost definitely types of market manipulation. The pump and dump type schemes, which are highly illegal, by the way, you know, they send out, when it's a low liquidity stock, they'll send out newsletters or create fake interest. So a lot of retail traders will buy this small cap stock, and these guys will already have some stock. As the price goes up, sometimes by multiple 100%, they will sell into that euphoria and that buying wave, and that's what the pump and dump is. They've got the stock already, they pump it up, they dump it, done. That's pure market manipulation. That is illegal. As is kind of the fake news type thing. Now, again, this is a word used quite a lot, or a phrase used quite a lot, but when they come out with stuff, again, these are smaller cap stuff. You're not going to find this in Apple or Amazon or any of these big guys, but smaller cap stuff, we'll get to bigger stuff in a moment, but fake news, saying, or pretending that perhaps they've, you know, they're pivoting. The big one was when companies were pivoting into blockchain from, you know, manufacturing, I don't know, drinks cans or something. All of a sudden they pivot into blockchain, or they pivot into vaccines or something. You know, and you think it's absolute nonsense, but perhaps the fact that they're changing the name, the fact that they've decided to do this, you know it's fake news, you know it's just creating hype. You know, this happens in the small cap murky world, the pink sheets, the real small stuff. And that is pure market manipulation. Some of it's blatantly legal, like the pump and dump. Some of it's like the grey area where they'll insinuate something to get the stock price higher. But if you're out of that field, what about the bigger stuff? So the bigger stuff, we're hunting for liquidity. Now, many people say, oh, market's manipulated, it's taking my stop, it's taking out the highs. I'll tell you guys that markets will automatically trade to highs and lows because it's just a magnet for price. Now, do we have things that are pushing the market there? Arguably, yes. Arguably, no. I'm not saying every time the market goes through highs is because market's been pushed there, because it takes a lot to push a market. However, I will tell you a story very, very briefly. I used to listen to the S&P 500 pit. And it would be a squawk that came through. This guy would kind of talk about what's going on. And there was a guy in there, number one local, and he was a big local. He was kind of the biggest guy trader in the pit. You had locals who were trading for themselves, and then you had brokers who were filling orders for outside customers. Just keep it summary for now. He would know when the other locals were trapped long most of the time. So they were long, and he would sell under the bid. So he would force the price lower. And this was kind of a bit of a hybrid of electronic, but when it was very, very quiet on the electronic, he would kind of do this. And I'm sure he couldn't do that now, obviously, but you know, as it was more and more pit, he would do this. So he would be pressurizing, bullying almost, by selling it, selling it, selling it, selling it, knowing that actually those locals, when we went under the low, they would have to cover the position, and he'd buy it back and he'd walk out the pit. So there was that hunting for liquidity. Now, does this happen now? Who knows? But very often, guys, price will go up through the highs, just a natural auction process. It'll go through the highs, it won't find any more buyers because there aren't any, and then it will back off. So and it will find liquidity with all the stops being triggered, from whether it's from retail traders, whether it's from algos, whether it's from orders coming in, whatever. We know there's always a cluster of orders above highs and below lows because people get in for breakout trades in there, people get out from stop losses there. So markets will tend to do that. Is it manipulation? Probably not. Was that guy manipulating it? Not really. Perfectly legal. He was just selling, and he knew that at that point there was likely to be a flurry of orders. It could have gone wrong for him. It's not in any way illegal what he was doing, as far as I know. And similarly for in the electronic market, if someone wants to buy and buy and buy, thinking that there's a massive going to be a cascade of buy orders hit after a certain level, then I don't see, if they generally want to buy the stock or buy the asset, why that's an issue. They might be wrong on it, and they're just kind of playing the game. But anyway, that's the hunting for liquidity type of thing. The other thing is pressing trapped players. So this sometimes is very similar, but this is sometimes when you hear funds on the street or in the city, if they're caught in a position. So word gets out that a small hedge fund, less than 100 million, is stuck short on a position, let's say natural gas, and natural gas is going higher. Other funds may well then not to get together, that's more of a cartel, but they will know perhaps the guy's short, the fund's short and hurting, needs to liquidate, and will buy contracts, because of course, it doesn't take a lot of money into some contract. Of course, you trade in S&P 500 or bonds or whatever, it's probably too thick, but some of the thinner stuff, like maybe a 5-month crude or some sort of natural gas contract, reasonably thin, people put in 10, 20 million in that very, very quickly, and can cause the price to really rocket and cause other things to come in. That may cause the other player who's really trapped to liquidate and exit, or their broker to force liquidate them for the margin call, and they take all the cream from that extreme move. So that does happen. That has happened from time to time. That's like pressing people who are stuck on the one side of the trade. Is that illegal? Well, who knows? I'm not a lawyer. I'm not a professional lawyer, guys. I don't think it is. In the end of the day, if you are trading and you believe, you might be wrong. You might think that the other player, in the end of the day, we're trading against someone else, aren't we? Ultimately, and we are, especially in the futures world. When you're going long, someone else is going short, you're hoping that the market goes higher, and if you're taking the counterparty trade from someone else, you're hoping you make money and they don't make money. That's just the way it is, and it happens to be on a bigger scale. But again, this is just hearsay, just things that I've heard as we've gone on through the years. And then you've got external pressures. So manipulation, external pressures, which is quite apt now. Things like the Fed. When Fed's pumping so much money and the Fed's buying things, and there's artificially, so to speak, money coming in. People say, oh, it's market manipulation. But guys, we all know what's happening. We all know where it's coming from. We all know there's an external pressure one way or the other. Maybe another thing could be when they limit short selling, make short selling illegal. All these different pressures on things. We all know that there's an external pressure that could cause the market to go one way or another. So, we got no real excuse not to either use it in our favor, or at least understand that it could have an impact. Not always, it could have an impact, could have a reverse impact. That's for you as a trader to kind of iron out and unwrap and make the decision from. So, market manipulation, guys, small caps, of course, we've got illegal, grimy little stuff going on, the fake news things. Hunting for liquidity, it's gone on for years. I'm sure it's going to carry on. Nothing manipulating about that, potentially. Pressing the trap players, we sometimes see that when guys are stuck in positions, funds are stuck in positions, and of course external pressures like Fed, like all these artificial things that come into the market and come out of the market that are causing pressures one way or the other, that people call market manipulation. But hey, this is the world we live in, and we've all got to trade the same market, so why not use it? All right, guys, take care. See you next one. Bye bye.